Hey yo, good evening viewers of the tube. My name is Tyler and let me introduce you to the channel that keeps you informed and up to date in this fast-paced, hard to keep up world of cryptocurrency. Well, let's try and slow things down a bit because it's time for Chico Crypto. There isn't a doubt that I love seeing the crypto markets turn green and bullish momentum take over. Since the beginning of the year, Bitcoin has steadily stair-stepped its way up in price until this month when it went parabolic. This all has been in a 6-month time frame. Now let's take a similar time frame right before last bubble's peak. The two charts look eerily similar, don't they? That is why today I want to discuss what no other YouTuber will discuss right now because it doesn't fit their agenda and isn't popular at the moment. I want to discuss Tether and the possibility that this run is the coming of Bitfinex's second Tether bubble. Tether's influence over the cryptocurrency markets is growing, even though it is shrouded in controversy and shade. Even during the last bubble, Tether didn't have the volume it has today when compared with Bitcoin. Looking back at the peak in December of 2017, we can see that Bitcoin had just over 14 billion in 24-hour volume. If we scroll down to Tether, we can see it had just over $1.7 billion in 24-hour volume. Now, what does Tether's influence look like as of yesterday? About 27 billion in 24-hour volume for Bitcoin rounding down, and about $27 billion volume in Tether rounding up. Tether's volumes are matching Bitcoin. This is happening even with the authority of Tether printing Bitfinex being in a New York court accused for covering up the loss of $850 million from their banking partner, Crypto Capital Corp. Now, Tether and Bitfinex have also been accused of fueling the last crypto bubble, with multiple research papers providing evidence of Tether's misuse in the space. The most popular being John M. Griffin's and Amin Shan's paper, which is titled, "Is Bitcoin Really Untethered?" And it finally gives us an insight into the flow of tethers from Bitfinex to centralized exchanges, which is a web of complexities. Tethers were routed via Bitfinex from 2 anonymous wallets to and from US exchanges, Poloniex and Bitrex, and 2 major Asian exchanges, OKX, Huobi, and Binance, via other unregulated exchanges. Although many things have changed since the release of that paper. The way Tethers move through this web has of course changed, but most of the players are still involved in some form. One thing I need to point out is since heat has been coming down on Tether and Bitfinex from regulators, Tether balances on US exchanges have significantly dropped, while foreign exchanges like Binance and Huobi have grown their Tether balances. Besides who is using Tether as a trading pair on the exchange, the way the Bitfinex exchange operates has changed too. Back in the last bubble, Tether wasn't even a trading pair on the Bitfinex exchange. If Tether was deposited, a user's account was credited with a corresponding USD balance. It wasn't until late November 2018 that Tether added Tether as a trading pair, and users would now have to trade their Tether for USD on a market, instead of it being converted and credited for them. Here's what's interesting to me. Bitfinex was actually served subpoenas by the Attorney General on the exact same day they added USDT as a trading pair, and they stopped crediting USD balances. This was also around the same time that their banking troubles with crypto capital started to arise. But as we know, the public didn't know either of these things. This is when weird things started to go on with the Bitfinex exchange and in the crypto markets. This chart depicts the daily price spreads between Coinbase BTC USD pair and 4 large centralized exchanges: Bitfinex Blue, Gemini Red, Kraken Black, and Poloniex Green. As you can see, there wasn't much of a spread since April of 2018, but right when Bitfinex added Tether to its exchange in late November, things started to get wonky for Bitfinex. The public first finds out about major troubles within Bitfinex in late January of 2019. It is announced that Bitfinex and Tether were issued subpoenas by the US CFTC. This is when the spread hit its peak, as seen from this chart. The spread is interesting to look at because it signals how confident users on the Bitfinex exchange are in that they are solvent and they can redeem their USD. If they aren't confident in solvency, they will buy Bitcoin because if you can't get USD because they don't have it, you can withdraw BTC. The news and scrutiny of Tether peaked then, but over the next few months, the spread decreased as people became more confident in Tether's operations. And by April of 2019, it had come back to around 0%. Now, during this time, the Tether printer stayed relatively stable with no serious increases as seen from this chart, while the Bitcoin to USD price stayed relatively stable as well. It would make sense for Tether and Bitfinex to cool their printing jets as they were just issued subpoenas. It wasn't until March of this year when the Tether printers started firing up again on full cylinders. Zooming in, as we can see from March 11th, 2019 to April 26, 2019, from around 2 billion in circulation to around 3 billion in circulation. March 11th, 2019 is also an important date because this was the day Bitfinex added the Bitcoin Tether pair to their exchange. Why did the Tether printer go into full gear once BTC/USDT was added to the exchange? Was Bitfinex trying to make up for the lost 850 million by wash trading on its exchange through what it could effectively print out of thin air? On April 26, the New York AG released its investigation, and the public learned the full extent of what was going on with Tether. They learned about crypto capital, they learned about the 850 million going missing, and confidence in the exchange dropped once again, resulting in the spread spiking once more. As we can see from the zoomed in chart, the spread lasted from April 26 to May 16, 2019. And as we can see from the Tether supply, printing cooled off during this period too, during the New York AG investigation. No new Tether were issued during this period of time. Why is the March 16th date so important? What happened? On May 16th, Tether and Bitfinex got a win in court, as the judge granted them a motion to modify the injunction put against them. The court's order allowed both Bitfinex and Tether to continue their normal business activities. And boy, have they. As we can see, Tether printing has resumed after a short turnoff. It has increased by over 500 million Tether in just over a month, moving the Bitcoin price up with the increased supply. Also, the spread has moved back into line as traders forgot about what is actually going on and have been hyper-focused on the increasing price and bull run. Well, people, we are about to learn a whole hell of a lot more regarding Tether, Bitfinex, and how they are seen under regulators' eyes. On July 29th, we will see if Tether is going to escape these investigations and potential shutdown, as the judge will rule whether to dismiss the case fully against him. This is a big date because if it is dismissed, we may see some major things play out. In reality, we could see a Tether bubble that makes the last one look small in comparison. I could easily see the Bitfinex crypto cartel manipulating the price to 50K beyond, if given a free pass by the judge overseeing the case. But if the case is not dismissed, we know there is something there. What's uncovered could be a bomb big enough to take this market to its knees. But in the short term, we should be expecting a price increase, as the Tether printer yesterday minted 100 million more. The last time this amount was minted, the price jumped from 9,500 to 13,500. Cheers, viewers. I'll see you next time.